We're also truly excited to introduce you to the official forum of ninza.co, a dedicated platform for passionate traders around the world to connect, learn, and grow together. This is where we share powerful trading strategies, proven systems, professional-grade indicators, and real-world insights gathered from live trading experiences. The forum is more than just a knowledge hub. It's an open space where you're encouraged to ask questions, contribute useful tools or ideas you've discovered, and engage in meaningful discussions with traders from different backgrounds. Whether you're a beginner or a seasoned trader, your input is always welcome and valued. Our ninza.co team is actively involved in the forum and committed to providing prompt, clear, and thoughtful support whenever you need it. We believe that through this ongoing interaction between users and our development team, the forum will continue to evolve into a trusted place for traders to find answers, expand their knowledge, and refine their own trading approaches. Hello, traders, friends, and especially the ninza.co family. I'm truly excited to be here with all of you today in this webinar, with one simple goal to share my real trading experience using the Flazh Infinity system. In this session, I'll be focusing on key challenges that I believe every trader has faced at some point, including how to minimize slippage when placing orders, where to place stop loss and take profit levels effectively, suggested settings to optimize the system, and most importantly, I'll be sharing my personal take on a question that almost every trader has asked themselves. When should you buy and when should you sell? I hope what I share today will bring practical value and help you on your trading journey. Basically, it's identical to the setup we shared in the original guide. We've only made one small adjustment. We suggest increasing the min offset value to around 10 to 15. This tweak helps improve the reliability of the signal candles, as it adds confirmation through a deeper pullback. Feel free to adjust min offset to any level between 10 and 20, depending on your trading style and personal preference. Additionally, we recommend setting search limit the multiplier 7 to reduce the chance of signals being detected too late. Next, we'd like to share some tips to help you minimize slippage. You want first to avoid using extremely small king-Renko ratios such as 5-2 or 4-2. Specifically, we recommend not setting the brick size below 8 and the trend threshold below 2, as smaller settings can cause bars to form too quickly, increasing the chance of slippage. 2. Second, try not to trade during the early or late hours of the U.S. session, when volatility tends to spike unpredictably. 3. Finally, avoid trading around news releases or major global events, as these can cause sudden price movements and increase slippage risk. And the most effective way to eliminate slippage is to use limit orders. However, this approach may sometimes cause you to miss good trade signals if the price doesn't pull back to your entry level. That's why it's important to stay flexible. Use limit orders when precision is critical, and switch to market orders when momentum matters most. Trading is all about balance, knowing when to hold firm and when to adapt. So how do we actually put that into practice? Next, let's move to rows 4 and 5. These features are designed to help you enter trades more effectively, including reference price, offset value, and order type. Now pay close attention here. If your order type is set to market, you don't need to worry about reference price, offset value. It's as simple as that. However, reference price and reference price, offset value become essential when you're using pending orders. Here's the breakdown. Reference price determines the reference point of the signal candle, which is used to set the position of your pending order. Reference price, offset value defines how far your pending order will be placed from that reference point on the signal candle. It's all about precision and making sure your orders are placed exactly where you want them. Let me give you an example to make this crystal clear. Suppose you set the reference price to close signal bar, the order type to a limit order, and the offset value to 10. This means your limit order will be placed 10 ticks away from the closing price of the signal candle. Now, let's take a closer look at an example to better understand how a limit order works when combined with offset 0. In this scenario, when you set offset rackham 0, the system will automatically place your limit order exactly at the closing price of the signal candle. This approach has a clear advantage. When the market price retraces back to this level, your order will be triggered immediately. This method helps you minimize slippage, which is a common risk, especially in volatile markets. In fact, there are cases where you might even enter at a better price than expected, particularly if the market pulls back and then quickly bounces in your favor. However, no method is flawless, and risk management remains essential. There's an important guideline you should follow. If, after placing the limit order, the price does not return to the order level within the next 3 to 4 candles, it may signal that the initial momentum behind your trade setup is weakening. In such cases, we strongly recommend that you cancel the limit order to avoid being filled at a time when the signal is no longer valid or reliable. This helps you reduce risk and avoid entering a trade when market conditions have shifted. In summary, using a limit order with offset $0 is a powerful way to enter trades with high precision. First, stop loss placement, based on trading zone structure. In this next section, we want to share with you one of the most critical, yet often overlooked aspects of trading. Stop loss placement. We won't be discussing stop losses based on gut feeling, fixed distances. While those methods can work in some contexts, they often disconnect your stop loss from the actual structure of the market. Instead, I'll show you a way to place your stop loss that's entirely based on the system's structure, a method that's logical, visual, and clearly grounded in your setup. Let's begin with the trading zone, the core of this system. In any valid trading zone, there's always an initial candle, the one that establishes the upper and lower boundaries of the zone. This is the candle that marks the beginning of a price area where future trade signals will be formed. And this initial candle is the ideal place to set your stop loss. Why this specific location? There are 3 key reasons. 1, it's the origin of the trade structure. If the price breaks below or above this initial candle, it means the entire zone structure has failed. In that case, the setup you were expecting is no longer valid. There's no reason to stay in the trade. 2, the signal becomes invalid when the zone breaks. In this system, signals are not independent of zones. If the price invalidates the zone, the signal that follows it also loses its value. So placing the stop loss at the first candle ensures you only exit when the entire structure fails, not due to random market noise. 3, it naturally protects you from stop hunts. You can also clearly see on the chart that even when the price temporarily pulls back for a few candles and rises slightly, it often resumes the original trend without ever hitting the stop loss. This further proves why placing your stop at the first candle of the zone is a smart choice. It helps you survive through minor shakeouts and keeps you in the trade until the market truly proves your setup wrong. Placing your stop too close to the entry often causes you to get stopped out by fast, fake price moves, known as stop hunts. Second stop placement, leverage the power of the signal candle. Now that you've understood the first stop placement, at the candle that defines the trading zone, let's move on to the second stop placement, which is equally important. Placing your stop around the signal candle. So why this particular area? In this system, the signal candle is often an inside bar or a retracement candle, and that's no coincidence. These types of candles typically represent a significant shift in buying or selling pressure, often stronger than the surrounding candles. That's why, if price breaks below or above the signal candle's area, it strongly suggests that the prior pressure, whether bullish or bearish, has been fully rejected. This usually leads to a counter move or reversal, making it an ideal point to exit the trade. However, we don't place the stop right at the edge of the signal candle. Instead, we place the stop slightly beyond the candle's zone. This creates a buffer zone that prevents you from getting knocked out by sudden price swings, allows the market to breathe and possibly continue in your favor, and gives the trade a bit more resilience. Using this method gives you a strategic advantage. You can define multiple stop levels if trading with more than one contract. You gain more flexibility in trade management, adjusting to your personal risk appetite. You reduce the chance of being stopped out too early while still protecting your capital if the signal fails. This second stop placement doesn't replace the first, it complements it. You now have options. Place your entire stop at the zone origin for maximum structure-based clarity, or split your risk between the zone candle and the signal candle, balancing security and opportunity based on what suits your strategy best. Next, let's dive into the part we believe you've been looking forward to the most: how to use this system effectively. Or more precisely, how to identify the right moment to enter a buy or sell trade. This is the most critical question in any trading system, because no matter how powerful a strategy may be, if you don't know when to participate in the market, or if you enter at poorly timed points, the system's edge becomes meaningless. In this section, we'll show you how to spot high probability movements, how to determine the right moment to take action. Before we dive into entry signals, before that, we will demonstrate one of the ATM strategies that our team has researched and developed. However, to find out whether this strategy truly fits you or not, we highly recommend testing it on a sim account first before applying it to live trading. Keep in mind, not every ATM strategy works for everyone. Each trader has a different risk tolerance, trading psychology, and performance expectation. So we do not encourage you to copy our setup 100% without adjustments. Instead, consider this a reference framework and feel free to adjust it based on your own trading style, capital management, and emotional comfort. Next, we'll integrate the system with a powerful supporting tool, the multi-timeframe fusion indicator. This is arguably one of the most ideal tools for traders who want to increase the reliability of their trade signals. Simply put, multi-timeframe fusion allows you to identify trend alignment across multiple timeframes simultaneously, up to 5 at once. When these timeframes are aligned, your signal becomes more trustworthy, more powerful, and less prone to noise. In our strategy that incorporates the Flazh Infinity system, we use 3 additional timeframes: 80 tick, 120 tick, 100 tick. These timeframes work in combination with the main timeframe, NINZaRenko 26, offering a comprehensive and high-confidence view of the market trend. The input signal for the multi-timeframe fusion indicator is taken directly from the trend signal of the Flazh Infinity system, ensuring that all layers of analysis remain tightly integrated. Visual confirmation of trend alignment on the chart. Once the system is fully set up on your chart, you will be able to visually identify trend alignment signals through the clearly defined color overlays on the chart. Specifically, when the Flazh Infinity trend signals align across all 4 timeframes, including the main NINZaRenko 26 and the 3 supporting tick charts 80, 120, and 150. The chart will display a strong color cue to alert you. When all timeframes confirm an uptrend, the system will highlight the chart in green, indicating it's an ideal moment to look for buy setups. Conversely, when all timeframes align in a downtrend, the chart will turn pink, signaling it's a good time to look for short entries. This type of visual confirmation allows traders to quickly identify opportunities with confidence without needing to manually analyze each timeframe one by one. Experience live signals with multi-timeframe fusion. Now let's take a moment to observe how real-time signals appear directly on the chart when the Flazh Infinity system is combined with the multi-timeframe fusion indicator, a key component designed to confirm trend alignment across multiple timeframes simultaneously. As soon as all 4 timeframes, King Renko 26, tick 80, tick 120, and tick 150, align in the same direction, the system will automatically highlight the chart with a strong visual cue: green for bullish alignment and pink for bearish alignment. This allows you to instantly recognize high-confidence signals while removing emotional bias from your decision-making process. And while we observe how this works in practice, let me take a moment to explain why we chose to use both tick charts and King Renko together. A combination that creates what we consider a perfect match for trend clarity and signal reliability. King Renko is built on tick-based price movement, but it's designed to move only in a single direction at a time, providing a smooth, easy-to-follow representation of the trend. However, it can sometimes react sharply to minor fluctuations, which may lead traders to confuse noise with actual signals. On the other hand, tick charts, while visually simpler, offer a high level of noise filtering. By plotting bars based on the number of trades rather than time, they eliminate small, insignificant price moves, helping you distinguish real momentum from mere retracements. Combining both chart types offers a balanced perspective. You gain the visual clarity and trend direction from King Renko, along with the confirmation of true market pressure from tick charts. So, when all 4 charts align and the system highlights a signal, you can feel confident that this is not just a possible setup. It's a high probability opportunity that has passed through multiple layers of validation. At that point, your trade decision is no longer a guess. It becomes the outcome of a structured, logical, and data-driven signal recognition process. While the multi-timeframe fusion tool already provides a powerful way to validate signals across multiple timeframes, it's important to recognize that the market still has moments of noise, moments when misleading or premature signals can appear. To address this, we introduced an additional layer of confirmation: multi-instrument synergy, an indicator that allows you to analyze trends across multiple instruments. Whereas multi-timeframe fusion analyzes trends vertically, depth, within one instrument, multi-instrument synergy works horizontally, tracking the synchronization of trends between different instruments, such as NQ, ES, YM, and RTY. This cross-instrument confirmation brings several advantages. Trend synchronization. When multiple related instruments move in the same direction, it reinforces the trend's strength and reliability. Trend divergence. When instruments disagree, say one lags or moves in the opposite direction, it's a sign to proceed with caution or reduce trade size. For instance, if you're trading the NASDAQ, NQ, and you see the S&P 500 ES, Dow Jones YM, and Russell 2000 RTY are also trending upward, that's a strong indication of broad market momentum. This makes your Flazh Infinity signal significantly more trustworthy. The multi-instrument synergy indicator displays this alignment visually on your chart, using color cues, trend bars, or markers, so you can instantly see whether the market is in sync or sending mixed signals. Chart optimization, combining NQ and YM with Flazh Infinity. In this version of Flazh Infinity, I'll be using NQ NASDAQ as the primary instrument, combined with YM Dow Jones as a secondary instrument to validate trend direction. This combination not only enhances the accuracy of trend identification, but also provides a broader market perspective, especially when NQ and YM are moving in sync, which typically signals strong market trends. However, when using multiple indicators and tools on the same chart, it's crucial to keep things clean and visually manageable. A cluttered chart can be overwhelming, causing distractions, missed signals, and poor focus on key setups. So here's how I'll simplify the visual layout. I'll keep the background color of the multi-timeframe fusion indicator and change the marker to the letter F for easier recognition. I'll remove the background color of the multi-instrument synergy, but keep the candle coloring, since it plays a key role in visualizing the trend. With this setup, when both indicators align in the same trend, you'll instantly recognize it through a combination of colored chart background and colored candles, giving you a clearer, cleaner view of the market structure. Now, let's go over the trade checklist, a simple but powerful way to know when it might be a good time to take a trade. On the chart, you'll notice two markers F and S. F stands for multi-timeframe fusion, meaning the trend is aligned across different time frames. S stands for multi-instrument synergy, meaning instruments like NQ and YM are moving in sync. When both F and S appear on the same candle, it's usually a sign that the market is offering strong alignment both across time frames and across instruments. And if at that moment, the candle is pink and the background is pink too, so then it's probably a pretty good moment to consider entering a short trade. Seeing F and S show up together gives you that added confidence. No need to guess or overthink, just let the chart speak. Trading checklist: when signals don't appear at the same time. In real trading conditions, you'll quickly realize that the market rarely behaves in a perfectly synchronized way. There will be times when signals from different tools, specifically multi-timeframe fusion, denoted as F, and multi-instrument synergy, denoted as S, do not appear simultaneously on the same candle. This is completely normal and reflects the natural rhythm of market movements. That's why we introduced the second trading checklist as follows. If both F and S signals appear within a span of no more than 10 candles apart, the system is still considered to be in a valid state of alignment, and you may consider entering a trade if all other conditions are met. For instance, if the F signal comes first, and a few candles later the S signal appears, or vice versa, as long as the gap between them is within 10 candles, the setup remains valid. At this point, if the background color and candle color both indicate a strong trend, green for bullish, pink for bearish, you can initiate a buy or sell order depending on the direction. Flexibility over rigidity. Don't trade like a robot. However, it's important to remember that the market doesn't always align with fixed numbers. There will be cases where F and S signals appear 15 or even 20 candles apart. Yet price behavior, market structure, and your trading intuition still suggest a strong, reliable trend. This is where your experience and adaptability as a trader come into play. Instead of rigidly applying a number, train yourself to see the bigger picture. Is the overall trend still intact? Is price action confirming the signal or just moving sideways? Are supporting elements such as supply-demand zones, volume, or momentum aligning with your bias? If the answer is yes, then a slight delay in signal alignment doesn't invalidate the setup. In fact, it could indicate that the market is building up energy for a more meaningful move. Key takeaway: checklists are not strict rules. They're guiding principles to keep you focused and grounded during market fluctuations. Be flexible, but stay disciplined. Successful trading isn't about blindly following rules. It's about understanding the logic of your system, reading the market context, and most importantly, knowing when to act and when to step back. Important note, when trading with this strategy, by now, you've probably seen me demo some of the signals directly on the chart, and the yellow highlighted areas are where noisy or unclear signals appeared. But here's something very important to keep in mind when using this strategy. Because the system relies on multi-timeframe and multi-instrument trend confirmation, the entry conditions are naturally stricter than usual. This means trading signals will appear less frequently, and at times, the system may even filter out valid signals just because they don't meet all the criteria. But this is not a weakness. It's the price you pay for higher reliability and more consistent setups. So when you're trading, one thing you must learn is to let go of emotions. Don't chase after missed trades. Don't let FOMO take over, and don't force entries. Stick to your trading plan, trust the system, and stay disciplined. In the long run, you'll see that it's not about how many trades you take, but about how consistently and logically you execute them. In-depth sell trade example, when signals align properly. Now let me walk you through a detailed trading example, so you can see exactly how the Flazh Infinity system works in real market conditions, not just in theory. On the chart right now, we're seeing a clearly developing downtrend confirmed by the system's two core tools. Multi-timeframe fusion, marked as F, which confirms trend direction across multiple timeframes, and multi-instrument synergy, marked as S, which ensures trend alignment between different instruments. It's important to note that F and S don't need to appear at the exact same candle. As long as they appear within 10 bars of each other, the trend is still considered valid based on our checklist. In this example, F appears first, and exactly 10 candles later, we get the S signal. That makes this setup fully valid under the strategy's conditions. Once the trend is confirmed, we will select an appropriate ATM strategy from the ones we previously introduced, make a few chart layout adjustments to ensure everything is clean and easy to read, minimizing distractions during trade execution. Next, I'll go ahead and enter a sell order using 2 contracts. But, and this is very important, as I emphasized earlier in the session, trade entries alone don't determine success. Risk management does. So here, I'll apply the stop-loss strategy that we walked you through earlier. A simple, yet highly effective way to protect your capital and ensure consistency across trades. Remember, one of the most important principles of this system is discipline and consistency, no matter if the trade is winning or losing. No matter how volatile the market is, you must stick to your rules. That's the only path to long-term success. ATM strategy, break-even, and real-time stop-loss placement. As you can see, the ATM strategy we are using here isn't just about entering trades and hoping for the best. It's designed with complete capital protection in mind, including one of the most crucial features, break-even. The break-even mechanism automatically moves your stop-loss to your entry price once the trade has gone in your favor by a certain amount. This means the trade becomes a free trade. You're no longer risking your capital. So even if the market suddenly reverses, the worst case scenario is you exit at break even. No gain, but no loss either. This kind of risk management helps keep your trading psychology strong and your capital safe. Next, let's take a closer look at how we place my stop loss directly on the chart in real time. This kind of stop placement helps you avoid getting stopped out prematurely and stay in trades longer when the trend is intact. We highly recommend practicing this part thoroughly because this is a critical skill if you want to trade Flazh Infinity professionally and consistently. Now, as you can see, we're facing another classic setup. Both signals, multi-timeframe fusion F and multi-instrument synergy S, have appeared around the same time, clearly pointing to a bullish trend in formation. The gap between these two signals is within our allowed range, based on the checklist we discussed earlier. That means this is a valid buy opportunity. Following the same approach as before, we will now place a buy order using the same risk management method, with a well-structured ATM strategy that includes break-even protection and a clear stop-loss setup based on price action. Take a moment to relax and closely observe this process. How we enter the buy trade using the combined signals, where and why we place our stop-loss, and how we manage the position if price moves in our favor. It's important you fully understand how this system flows, because right after this, we'll introduce an exciting multi-timeframe pullback strategy designed to help you capitalize on retracements within strong trends, giving you better risk to reward entries and improved consistency. Now let's look at a strategy where we use multi-timeframe fusion to identify pullback setups across multiple timeframes. Step 1, when all 4 selected timeframes enter a downtrend, we will place a sell order on the first bearish reversal candle. The stop loss is placed at the high of the nearest bearish reversal candle. Once the first of the zone appears, we will trail the stop to the level where the zone formed. The reason we choose this candle is simple. It's the first moment when all time frames align and there's a clear shift in price action. That gives me a strong and early entry into the new trend. In this case, we set my target at the nearest previous low. There's no one-size-fits-all method for setting stop loss and target. These levels should be adapted to each trader's personal risk tolerance and trading style. That's why we encourage you to consistently test and refine your approach to find the risk management strategy that fits you best. And this is the most exciting part. Take a closer look at the chart. NINZaRenko 20-hour 6 has shifted into an uptrend, while the largest time frame, 150 ticks, remains in a downtrend. This clearly implies one key thing. The short-term uptrend on 26 is actually a pullback within the larger downtrend. Even more importantly, this is the very first pullback since the larger downtrend began, which makes it an ideal entry point. At this moment, you should trigger a sell order to anticipate the continuation of the main trend. When all 4 time frames return to a unified downtrend, the system will confirm the end of the pullback, and you'll already be positioned to benefit. As you can see, when all 4 time frames return to the primary trend, it confirms that the pullback has ended. This is our cue to initiate a sell order in line with the main downtrend. Our stop loss strategy remains the same. In this demo, we'll showcase 2 sell entries with different stop placements. One sell order with the stop loss placed at the pullback formation level, the zone where price reacted and formed the setup. Another sell order with the stop loss placed at the signal candle level, where the trend clearly resumes. By demonstrating both approaches, we hope to give you a better sense of flexibility in risk management and how to adapt your stop placement based on the market context. In our usual trade management approach, we often apply a break-even mechanism, where once the trade moves into profit, the stop loss is moved to the entry point to secure a free trade and reduce risk. However, for this case, we will not use break-even. We'll turn it off and allow the trade to run until either the stop loss or the target is hit. Disabling break even allows me to observe the full price behavior and evaluate how the strategy performs without any automatic stop adjustments. As you can see, with the current stop-loss strategy, we still have to accept risks and may need to cut losses as usual. This is an important reminder. No stop-target strategy is perfect or immune to market realities. Losses can happen at any time, even when the signals seem crystal clear. That's why, besides having a solid risk management plan, you must have a proper capital management strategy to avoid losses that exceed your account's tolerance. Keep your trading psychology calm and in control. A quick tip for you. If you notice the market has been overlapping for a while and price has already moved quite a bit, consider pausing new trades, even if the next signals turn out to be winners. The market isn't always ideal for trading. Finally, let me emphasize, Flazh Infinity is not a 100% winning automated system. It simply provides automated trade entries to help you save time and avoid manual errors. Whether the system delivers profit or not depends entirely on you, your ability to analyze, your mastery of the system, and how well you apply a disciplined strategy. Tools are just tools. The real decision maker is still you. Before we jump into the live trading session, please give us just 20 seconds. This means a lot to us. Right now, you can get Flazh Infinity for only $8.96 and receive a massive $800 voucher in return. Or better yet, unlock the full power with our ultimate trio. Multi-timeframe fusion, multi-instrument synergy, and Flazh Infinity, all for just 1 to 50s. Even if you just want fusion or synergy, we're giving you a huge 60% discount today. Thank you so much. Now let's get back to the action. Real-time trading, combining system discipline with market flexibility. After presenting multiple examples and walkthrough demos to help you understand how the system works and how trading strategies are constructed, we now move to what might be the most important part: live market trading. In this section, we won't just repeat what's already been discussed. Instead, we'll show you how we actually make decisions and place trades in the real market in real time. In this specific trade example, you can observe a clear alignment across several core elements. The trend across both lower and higher time frames is starting to realign to the downside. At the same time, a short-term pullback on a smaller trend has just ended, signaling that the market may now resume its main direction. All of our tools, including background color, bar signals, and signal zones, are confirming the bearish setup. This combination creates a strong case for entering a sell trade, as all our critical conditions have been satisfied. The major trend is clear and aligned across time frames. The pullback has ended, and price structure is resuming the main trend. F, fusion, and S synergy signals appeared within an acceptable distance, under 10 bars. Price action remains clean and structured, with no heavy overlap or consolidation that would reduce the trade quality. Based on this setup, we are entering a sell order with 2 contracts. One contract uses a stop loss at the signal candle. The other contract uses a stop loss at the signal zone, giving us a balance between protection and profit potential. We are not applying a break-even strategy in this case, as we want to give the trade more breathing room after a pullback, especially when the trend has just resumed. We invite you to watch closely as I place this trade on the chart, from signal confirmation, stop placement, to trade execution and monitoring. This is the moment where you can clearly see how the system not only automates part of the process, but also empowers you to stay in control, with logic, structure, and discipline. Watch this part carefully, because soon you'll be the one applying it in your own trades.
Order filled. Target stop filled. Order submitted. Order filled. Target filled.
In today's webinar, we've covered all of the following key topics: solutions to help avoid slippage, suggested stop placement strategies for different time frames, when to buy and when to sell, how to filter signals effectively, a practical trading checklist. We truly hope these insights will be helpful and bring more value to your trading journey. Stick around till the very end. There's something exciting waiting for you right after we reveal the promotion. Trust us, you won't want to miss it. And now, drum roll please, the deal you've been waiting for. It's hot, it's spicy, and it's going to make your wallet smile. Option 1, pick one, get 60% off. Grab either multi-timeframe fusion or multi-instrument synergy, and boom! 60% discount, just like that. No coupon code, no gimmicks, just good old-fashioned webinar magic. Option 2, can't decide, get both. Still 60% off. If you're feeling fancy and want to level up everything at once, we've got your back. 2 heavyweights, 1 knockout discount. Option 3, Flazh Infinity. Big energy, bigger bonus. Only $896, and we're throwing in a $700 voucher like it's candy at a parade. It's like buying a steak and getting dessert, drinks, and valet parking for free. Note: only valid for regular price. We play fair. Option 4, the all-in combo, triple threat, one price. All 3 top products, just $1,050. Translation: if you're getting Flazh Infinity anyway, just add 150 more and boom, full arsenal unlocked. That's like upgrading from economy to first class. for the price of an extra sandwich. Wait, there's more. Just by showing up today, you're getting a $200 gift credit. No strings attached, no weird forms to fill, no sacrificing your cat. You came, you watched, you win. And hey, don't go anywhere yet. We've got one last surprise at the end of this webinar that's going to knock your trading socks off. Stick around. Trust us. It's worth more than your next cup of coffee. We're also truly excited to introduce you to the official forum of ninza.co, a dedicated platform for passionate traders around the world to connect, learn, and grow together. This is where we share powerful trading strategies, proven systems, professional-grade indicators, and real-world insights gathered from live trading experiences. The forum is more than just a knowledge hub. It's an open space where you're encouraged to ask questions, contribute useful tools or ideas you've discovered, and engage in meaningful discussions with traders from different backgrounds. Whether you're a beginner or a seasoned trader, your input is always welcome and valued. Our ninza.co team is actively involved in the forum and committed to providing prompt, clear, and thoughtful support whenever you need it. We believe that through this ongoing interaction between users and our development team, the forum will continue to evolve into a trusted place for traders to find answers, expand their knowledge, and refine their own trading approaches. And now, the cherry on top. Your bonus gift just for joining this webinar. With any purchase made during this webinar, you'll receive our exclusive indicator, Smart Ruler, the tool we proudly call the #1 measuring stick for NinjaTrader. It lets you measure the distance between any 2 points on your chart and gives you a treasure trove of valuable insights. It's sharp, smart, and seriously underrated. But hey, if Smart Ruler isn't your thing, no worries at all. Just reach out to our friendly support team and they'll swap it for another gift of equal value. Because hey, if you're going to treat yourself, it might as well be something you love. Thank you so much for joining us today. Wishing you a successful trading day ahead, and we look forward to seeing you again in our next webinar. Until then, trade smart and take care.